Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new episode Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This has been brought to you by Orbex. I will cover dollar CAD, crude oil, dollar yen, S&P 500 and gold. Now, firstly, let's take a look on crude oil. As you know, there's an energy crisis in China, and of course, this has also an impact on crude oil prices, and overall higher energy prices could lead to even more inflation, to even higher prices of products, which is not good for economy. In fact, because of higher energy prices, there can be also a lot of companies that may shut down their production based on costs, obviously. So we'll see what will be the longer term impact, but so far it looks like that energies has room for more upside. Now, firstly, looking here at the monthly scale, we are breaking out of this downward channel, so it looks like that there is definitely an uptrend in progress. However, I think that this uptrend may resume after potential more deeper and possibly more complex corrective price action. Notice that at the moment we are seeing prices moving back here into these 2018 highs, also back into this area from this summer. So again, we are at the potential resistance, but I'm not expecting anything significant. I'm just aware of potentially more complex corrective structure like an ABC formation. We also have this divergence here on the RSI. So yes, maybe there is important timing actually, and based on price as well, that we could see a slowdown here. However, I'm aware that maybe this trend will not slow down so easily, so I just prepared another interpretation here. Now, the first idea is that, as I said, maybe that's a wave B rally into a new high. In fact, there is a chance to count this in 7 swings. You have also some kind of overlapping activity within this upward channel. But if that's the case, then current resistance area here around $75 to $77 per barrel should hold. So it's a do-die zone, okay? So if we see a drop, let's say back below $73 per barrel, then I think that we will continue to consolidate it, consolidating here on a higher degree scale, and we'll definitely be looking even further in time for this ABC formation. Now, if we go even higher and let's say that we touch $80 per barrel, then I think that higher degree impulse is still in progress, and in such case I would be willing to look for this to be an impulsive ongoing activity up from August levels. Okay, so as I said, it's a do-die zone here. This resistance, if we fall from here, let's say back below 73, then be aware of more sideways or even bearish price action. If we go towards 80 area, then be aware of more upside after pullbacks. So I think we will get a lot of answers by the end of this week. Now, while crude oil is trading higher, of course, Canadian dollar has come to the upside against US dollar. Now, looking at primary wave count here on a daily chart, I'm still looking this to be a very important resistance in place around 1.2950 area, from where we have seen a very nice drop recently. Then we also broke out of this downward channel, so I'm thinking about more weakness, at least in the short term. And the reason is also this drop from 128.98 level, where I can count 5 waves down, and this is much better shown here on the line chart. Now, maybe you will now ask yourself why I'm looking or using line charts. Well, sometimes the price actually it's not very clear on bar chart, so I tend to look at the line charts just to make sure that I'm on the right track. And if I see much clearer picture here, and if I consider what the higher degree time frame charts showing me when we are turning bearish after this reversal from resistance, then of course I will stick to this bearish view, because I can count 5 waves down here on the hourly. But of course this weakness may not resume so easily, maybe after a 3-wave rally. So watch this resistance. Now, first one is at 2660, followed by 2724 area. So these are the 4 waves where upside can be limited after this 3-wave bounce. Now let's take a look also on dollar yen. Now dollar yen is finally breaking higher, and the reason for this pair to breaking out is actually because we have seen a rise or bounce on the S&P 500 futures from last week, from that lows, and also we have seen at the same time rise of the USOIL. So this makes very bearish Japanese yen, especially if we consider that the Bank of Japan is likely going to stay on hold with the current policy, and then you have on the other hand this potential dollar rise because of speculation regarding tapering. So yen is also moving to the downside when you have risk on. So if maybe stocks will continue to be even higher, then I think, or at least consolidating while you have these US yields moving to the upside, I think that this makes a perfect combination for higher dollar yen. So here we are seeing a very nice break out of a triangle, and looks like that this current rise is a fifth wave. Still not very bullish, just in the short term I'm expecting more upside, because after all, fifth wave is a final leg in a 5-wave sequence. So I'm tracking a final leg here from this 2021 January lows, okay, from start of this year. So I'm looking for a retest of 2020 February last year highs, and of course before that even July highs should be taken out. So there is room for slightly more upside here. Watch out for any pullbacks if we will get them before we print the new high. I think that there can still be some opportunities on the upside, but as I said, there should be a pullback. Of course, the first support is at 110.50, and then you have 110.80 area. So that's the zone where it could be very interesting for some short-term buyers if we get that pullback while we are still below that highs, because once we are at the highs, keep in mind that fifth wave could already be finished, okay, or very near completion. Now let's take a look also on the S&P 500. Now the S&P 500, I believe, is still in uptrend. I will look and expect more upside after any pullbacks. So far we have seen a very nice pullback after this break out of this ending diagonal here that we were tracking recently. We have seen a nice dip, and now we are recovering. So I assume that we could stay stuck here in higher degree range for a wave 4. What to pay attention on when we will move to the right and maybe even slightly to the downside is potential support line here for this wave 4, connected from 2020 September and October swing lows. So we'll see if we can get another bounce from that area, especially when it comes also from time perspective. Here was a recovery starting in November of last year, so maybe this wave 4 has time to unfold itself by November and complete this formation. Now looking at the intraday charts, here can be something interesting for short-term traders. Why? Because despite a very sharp drop here, keep in mind that rise from that dip is in 5 waves. Maybe not the best shown here on this 4-hour time frame chart, but if you look at the 1-hour time frame, which is not the right, here it is on that chart. So here we have very nice 5 waves up followed by a 3-wave drop. So I think that this could be now a new consolidation phase, maybe something not exactly similar like we have seen here in a downtrend, but here was just a little bit more complex and sideways correction, moving with the price to the right. So it was a range bound market, while here can be a deep correction, but it's still in 3 waves. And what is important that previously we have this 5-wave price. So even if this current recovery is temporary, like a corrective bounce, I think that there is room for more upside to retest maybe a 4500 level. So on the intraday charts, if we can, let me close this one, if we can rise back towards 4450, I think there is more upside coming. Now the short-term invalidation level obviously is here at these lows. Okay, and now finally let's take a look also on gold. Now gold is here still stuck in the range since last year from August, and looks like that triangle is still very good in process here. In the middle of this process, we are tracking sub wave B of D. Keep in mind that each leg in a triangle should be made by corrective characteristics. So looking at the 4-hour chart, this rally from a spike low can be a 5-wave movement for a wave A, and now you have an overlapping drop. ABC X ABC in 7 swings with the overlap, very deep one here between wave X and previous wave A. So that's why I'm looking at this to be a counter trend movement. Now, very nice support obviously is around 61.8 at 78.6 retracement, and you are now approaching that level. So we'll see market can rally by the end of the week. Now, what would be very important for me is to see a rise back above $70. Then I would probably be willing to look for potential long opportunity here after pullbacks. But for now, of course, trend is still down because you have lower highs and lower swing lows, which is a downtrend, right? So if you want to change this trend, you want to see any of the previous swing highs to be broken. Okay, and when that happens, that's when actually we could start looking in our direction here on the bullish scale, especially if we see a 5-wave rally from an Elliott wave perspective from the lows, because that would be technically very nice indication that bulls are already back on track. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and again, I will talk to you soon. Bye.